name's Andrew Harrop. I'm the General Secretary of the Fabian Society, and it's a pleasure to welcome you all here tonight for a special meeting which is launching a new Fabian Society report that we've published today called Better Off, which is basically asking the question, how do we create the economic responses to the coronavirus crisis and the recession that is just starting in a way that leads to long-term improvement in the economy and a better, more progressive, more environmentally friendly society over the next 10 years, as well as fighting the immediate economic crisis. It's a new essay collection from the Fabians, which pulls together some of the best thinking across the left in Britain, with contributions from politicians and a range of experts and think tankers. And it's all been made possible because of the generous support of the ABI, the Association of British Insurers, who have also contributed a very thoughtful chapter on how the insurance industry and the left could work together in partnership on, sort of better government in the future. We'll be hearing in a few minutes from Huw Evans, the head of the ABI. The other two speakers we're going to be hearing from, who have both also written chapters from the report, are Anneliese Dodds, the Shadow Chancellor, who's done a fantastic overview of Labour's thinking on the economic response and how that leads to a better, more ambitious economic plan for the country. And from Will Hutton, who has written on Keynesian economics and how some old truths need to be reapplied, both in terms of what we think of as, if you like, how we stimulate the economy, but also institutional reform of the economy. Now, of course, when we launch a report like this, we can't have all the speakers, all the chapter authors as speakers. There just wouldn't be time. But I do want to recommend that you download the report and have a look at it. I will put the link in the chat function because there are excellent contributions from across the range of authors. And I hope you'll take the time to look at things on localism and devolution, on green recovery and Green New Deal, on private sector reform and whether there's an opportunity in terms of the private sector bailouts that we have at the moment to change the relationships with the private sector. And that's just a taste. We've also got a great contribution from Seema Malhotra, who's the Shadow Employment Minister, and she's written on unemployment. So the whole collection sort of like stands together really well, and we'll come back to that in the discussion and question and answers once we've heard from Anneliese, from Will, and from Huw. What we'll do is, after their contributions, we'll go into some question and answer time. And the way we do this is that you can ask questions in the Q&A function on Zoom. So if you type in a question, you can also vote on other people's questions. So if you vote that you like a question by someone else, that gives it a greater chance of being picked out from the hat and asked. So do type those in as we're going along. If you are called, we'll try and bring you in live on the audio. If for any reason that doesn't work, then I'll read out your question, but we'll try and give you the chance to ask it yourself. So that's all the introductions. I'm now really pleased to hand over to Labour's Shadow Chancellor, Anneliese Dodds.
Thank you very much indeed, Andy. It's such a pleasure to be here at the launch of this really important pamphlet, and really lovely for me to be on a panel with Will, who's been saying such very, very important things during this crisis, and of course for many years before it, around industrial policy and the role of the state and so many other things as well. And of course with Huw also, who for many years it feels like I've known him and always focused on long-term issues, and particularly some of the investment challenges that the UK has and the contribution the private sector can make in that regard. I don't want to speak for too long, but I suppose I particularly wanted to focus on some of the really critical challenges for our country in facing up to current circumstances, because we know that every economy across the world is having some impact from this crisis. There is a necessity for social distancing. We appreciate that because of the horrendous health infection that is upon us right now. But probably a number of people present at this event will remember that report from the OECD, which was released a few weeks ago now, which suggested that just as the health impacts of coronavirus will be one of the most severe in the UK, unfortunately, we will also see a very, very significant economic impact from a hit of coronavirus in the UK. Indeed, they suggested it could be the most severe economic hit from the coronavirus. And if there was then a second wave of coronavirus, they suggested that also the UK would be one of the most affected economies. And why was that? Well, it was because, in large part, it seems, of many of the structural issues that we've seen with the UK economy that have particularly intensified in many cases over the last 10 years. And in fact, the Chancellor has himself acknowledged some of these, the fact that we have a very, very service-dependent economy, for example. We also have a labour market, which, as people will be very much aware, is a highly precarious one. In many cases, lots of non-standard forms of employment makes it hard to design forms of support for people in those circumstances. We also have a very, very weak rate of replacement of people's wages coming through unemployment support and social security. We have weak tripartite institutions as well, which have posed such enormous problems when it comes to both maintaining people's incomes over time, but also now when it comes to ensuring that we have the coordination that's necessary at local level to deliver retraining, reskilling, but also industrially to make sure that we have the PPE testing and so forth that we need. So what needs to be done, and what's Labour's response and Labour's call at these times? You know, I think the first thing that we need to make absolutely clear is that while the government, yes, is investing, of course it is, none of us could dispute the fact that it is, for example, backfilling large numbers of people's wages, at least until October, for example. While it is making that expenditure, it's not been willing to take many of the necessary decisions and to be active in the way that we need right now to preserve our economic capacity. I think a particularly clear example of that is the unwillingness to adopt a more sectoral approach to support, where we see, of course, the furlough scheme, the job retention scheme, the self-employed scheme being withdrawn at the same rates across all sectors of the economy at the same time. Government saying they couldn't have a different approach because that would be to pick winners, in their words. Well, of course, this crisis has involved government picking losers, designating losers for the first time as part of such an economic crisis. It is necessary for them to effectively get their hands dirty here. They really do need to intervene and take those decisions in order to protect economic capacity. Again, they need to engage with some of the big restructuring challenges. We look at a sector like aviation, for example, where we need to have a long-term plan, one which recognises the fact that the climate crisis is an enormous challenge, one which will likely lead to, rightly, a reduction in conventional air transport, no question about it. But instead of that plan, instead of that activist approach from government, we see different airlines effectively slogging it out, huge numbers of jobs being lost, restructuring occurring at an accelerated pace, but without any plan underlying those developments. So not an activist approach there. Again, we see when it comes even to our health approach and the public health challenges that we face, very, very often the levers that government has reached upon are those conventional ones which you might expect a Conservative Party to reach for, you know, the very, very major outsourcing firms, not engaging with local authorities, with those bodies which could provide some coordination to ensure that we have materials where they need to be, that we have testing systems where they need to be. So much more activist approach is necessary here. And that, as I said, is not about the quantum of financial support. It's about how it's developed and the engagement of government in those really critical questions. Secondly, we need to have a recognition of the long-term costs of unemployment and the fact that this crisis is so unlike previous ones. After the last global financial crash, of course, we didn't see the rise in unemployment that many might have anticipated. We saw indeed record levels of employment over recent years, but we know that in many cases that wasn't underpinned by the strong rise in investment that was necessary in the private sector or indeed in the public sector. Many of those new jobs that were created actually are the ones which are impossible to carry out right now because of reductions in demand in sectors like hospitality, retail and elsewhere. And that means that the possibility of much higher levels of unemployment as a result of this crisis is far, far higher. So we need government both to be enabling employers to retain that relationship with their staff in a much more engaged way, as I said before, but it then needs to be focusing much more actively on how to help people who have become unemployed. And of course here, we are relieved that government has listened to the need for an active labour market policy with the new Kickstarter scheme, but it doesn't seem to be calibrated with the apprenticeship scheme. In fact, it seems to be in competition with it, which is very concerning. It doesn't seem to be rooted locally with employers' federations and with further education colleges and other intermediate associations like trade unions in the way that it needs to be to ensure that it will work the very best that it can. So much more required to be done there. And then finally, and I feel like, sorry, I've gone on for ages and I know the other speakers have many points to make, we do need to be focused on ensuring our economy is ready for the jobs for the future. And of course, lots of really exciting writing around this in this volume. That means not just re-announcing previously made statements about capital investment. It means looking around the world at what is being proposed elsewhere. I calculated that all of the brought forward capital investment that the government is badging as green only amounts to round about the same as Germany is investing in just one technology, hydrogen. We must have a much stronger ambition for our country for dealing with regional inequalities, but also for facing up to the climate crisis than we currently have. And that most definitely is what Labour is pushing for. So thanks very much indeed for the opportunity to be part of this discussion and really looking forward to what the other speakers have to say. Thanks.
Thanks so much, Anneliese, and also for your excellent contribution. It's, if you want to hear more of Anneliese's ideas, you've got it in front of you in the report. So let me turn to Will, who's also written a really thoughtful and wide-ranging article. Will, I hope it doesn't feel like you've been banging your head against a brick wall, because many of the issues you talk about in this chapter are things you've been writing about for many, many years and haven't been listened to.
Yes, well, I was just thinking actually, I wrote The Revolution That Never Was, and I kind of reappraised of Keynesian economics in the mid-1980s, that's 35 years ago, and then restated it in the State Room, which was 25 years ago. So here I am, However, I do think, what I've entitled my chapter "Think Big," and I guess that's what I'll speak to. I'll try and do this very fast. I've got 7 minutes, so I'm going to spend 2 or 3 minutes on just trying to say something about Keynesian economics and actually what it says and how it can be a compass for what can be done, and then reinforce some of the things that Anneliese has been arguing for and add some more. Of course, everyone understands when there's a big kind of borrowing increase of this type we've seen, quantitative easing of the type we've seen, they understand that actually throwing monetary and fiscal policy aggressively as possible to counteract a recession is heartland Keynesian economics, and they're right. But here's my big point. That's just the kind of 1/10 of the kind of iceberg, if you like. There's 9/10 beneath the surface. How is it that Keynes comes to these conclusions? And his big point is that capitalist economies are inherently unstable. That's because they're beset by kind of 3 big things. One, radical uncertainty. One cannot know the future. It's unknowable. Differential speed of adjustment between various markets, notably the labour market, which must adjust more slowly than the financial market, and multiplier effects. Put that together, and you don't have a well-oiled machine, as imagined by classical free market economists. What you have is you have systemic instability and systemic inequity. And consequently, the state has to be active and agile, regulating, building institutions, socializing risks, superintending finance, securing fairness, building in resiliences, to organize what markets of necessity can't. And public and private have to be seen as kind of interdependent spheres. They need each other. But here's the big, big point. Different rules apply to the state. It's not a household or a firm. The kind of way it was imagined by the recent OBR report, which I was very upset by. Upset's probably I just felt, trying to conceptualize the state as having to kind of live by a kind of household economics, balancing the books, doesn't capture the fact that the state lives over time. It can borrow for 100 years if it chooses, in a way a household cannot. It can tax, it can spend, it can borrow, it can regulate, it can make the rules of the game. That's the big Rubicon to cross. Rishi Sunak has crossed it temporarily, but the concern is he's going to kind of regress to the kind of old way of thinking. So here's really what I want to say about Keynesian economics and how it kind of informs some of the big things. First of all, the furloughing scheme must be retained. It must be, the Kurzarbeit scheme in Germany, on which its model lasts for 12 months. To phase this out after 7 months, 4 months at the full rate and 3 months at a tapered rate, is at the height of folly. Nobody knows whether, at the moment, whether 10% of those furloughed or as many as 35 or 40% of those furloughed are actually going to be made redundant. The OBR thinks it's 10%. I think the figure, judging from the surveys of people like the CIPD and others, is likely to be much nearer a third. That's 9 million people furloughed, excluding the self-employed, that's another 2 million. If you think a third of them are going to be rendered unemployed as a result of COVID, you're talking 3 to 4 million on top of kind of the claimant count at the minute, which is 2.8 million, 2.9 million. It's perfectly possible, as the Institute of Employment Studies has said, that unemployment could top 5 million in the next 6 to 9 months. This is profound. And what you do in these cases, Keynesian economics, because you cannot know the future, and because the state is the only kind of actor that can think big, is the state has to sustain the wage subsidy program. You can flip it from being a furloughing scheme to a wage subsidy scheme. So you try to keep, firms are incentivized to keep people on their payrolls actively. And you should certainly, I think, focus efforts on supporting 16 to 24-year-olds who can suffer kind of enormous scarring. Because if you have 6 million unemployed, you can be sure that a disproportionate number of those will be 16 to 24, as many as 1.5 million. They could bear the effects of the rest of their lives. Yes, that has to be accompanied by a big stimulus package. Think big. Of course, it has to have a green dimension. I also think we should be thinking about really smart ways of focusing kind of growth poles. There's not time in my 7 minutes to develop that, but in the question and answer section, maybe that can deal with that. Then the financial system. I mean, that is where the other locus of instability. Now, to the Bank of England's credit, there's been massive COVID business interruption loans, emergency kind of credit lines, attempts to help kind of SMEs and small businesses kind of survive. But actually the British banking system is not organized to channel that credit to where it needs to be. And actually this is a moment which I've called for kind of, I'm sorry to say this, for a long time, as you said in your introduction, but this is a time to kind of reshape the British financial system. I think the Business Growth Fund should be really scaled up to be something as big as, if not bigger, than the ICFC that was established after the war for just these reasons. I think that the business bank, the British Business Bank, it's the only thing we have. It's not very good, but it can be scaled up. It needs to be 10, 15 times bigger to be the conduit for the kinds of credit lines that the Bank of England is developing to get to the British SME community. I would like to see the export guarantee kind of approach where you guarantee exports approached actually internally to high IP companies so that they can collateralize their IP and to make it lendable against. Maybe we could have some innovative scheme. I'd like to hear what the ABI think, in which that kind of lending is bundled up and potentially kind of collateralized, syndicated, bought. Maybe some of the £2 trillion that the insurance industry has at its disposal could be invested in that kind of vehicle. I also think, picking up kind of your point about what to do about our reshaping our capitalism, the reset that's called upon, I think we should be insisting that the 500,000 firms who one way or another have been in receipt of credits, bailout, furloughing deals, that they should reciprocally commit to the corporate governance proposal set out in the recent corporate governance code. They should declare their purpose and live by it, report by it. And that should be something that we have an expectation we set of our business sector as it emerges from this pandemic. And I, particularly as I call from my little paper, I think that there's a case for banks, particularly now there's the kind of ring fence, the commercial banks, not the investment banking arm, but the commercial banks being reconstituted as public benefit companies, that banks should exist actually for the purpose of actually canalizing credit to those who need it in our economy. Quickly, a last few words before I sign off. I mean, Keynes was an internationalist to his fingertips. He would not be talking about doing this in one country. He'd be congratulating the European Union on, after their 4-day marathon of coming up with their recovery fund, probably saying it needed to be bigger still, but congratulating them still on it. Britain undoubtedly should not be trying in 2021, 22 and 23, being outside the single market and the customs union. I'm sorry to raise this. Brexit, leave, remain is not where politicians want to go at the minute. But I think that any recovery program worth its name has got to have Britain in the kind of trading nexus of which we are geographically part, particularly as the WTO is in such trouble. How is all this to be paid for? I think the government is right. Our debt management office has been managing the debt program extraordinarily well, selling gilts at negative interest rates at the short end of the market. I think that over the year ahead, we may have to put our toe in the water with perpetuals, or if you're failing that, 75-year debt, the kind of debt that was issued during World War II. If you're concerned that that may be inflationary, act when the recovery is underway to sterilize liquidity, calling for special deposits. I wouldn't talk about raising taxes now. It may be when recovery takes hold sometime in 21 or 22, there is a case for some capital tax. I would be interested in the revisions of the capital gains tax that Sunak is talking about. Inheritance tax could be utterly overhauled. I think we're going to have to confront raising other taxes as well, environmental pollution taxes. The whole framework can be looked at. It's an opportunity actually for tax reform. My big message is think big, think Keynesian, act on the financial system, act on the labour market. I also think, just to sign off on this one, and a little kind of just thing to throw into the mix, I wonder, given that getting people back to work requires the confidence of labour forces, whether we shouldn't be encouraging all companies above a minimum size of, say, a payroll of 250 to strike resilience pacts with their workforces, in which there is a mutual understanding of how the risk of being in workplaces and managing social distancing, managing potential COVID outbreaks, managing the workplaces so that they are safe and resilient, may be a way of encouraging people to come back to work in a way that we need. And actually that can be accompanied by the continuation of the furloughing scheme. I've spoken for 8 or 9 minutes, not my 7. I better stop. I think it's 8 minutes I've spoken for. I'm going to stop. Thank you very much.
Well, thank you very much. And of course, I'm sure people will have questions to fire at you in a moment as well. And that reminds me, if you want to ask a question, do write it in the chat now so that we know that we'll put you in the queue. And then our last speaker is Huw Evans from the ABI about the role of insurance and long-term saving as a partner for government in tackling this crisis and other social problems.
Thanks, Andy. Well, look, the golden rule if you're a partner organisation or something like this is to keep it brief. Nobody's come to hear you, so I will do. But just to say, it's a pleasure and honour to share the panel both with Anneliese, with whom she said we worked closely in her previous roles, and who we look forward to supporting very much with the important responsibilities that she has as Shadow Chancellor. Delighted to support, not for the first time, work with you, Andy, and the Fabians. I think you've always asked the hard issues and focused on them, and not descended off into Never Never Land. And under your leadership, I think the Fabians has been a key part in the infrastructure and needs to remain so in terms of how we tackle these challenges. And finally, it's a great honour to follow Will Hutton. You couldn't be a Labour Party official, as I was in the mid to late 1990s, without having either the state you're in either on your desk or in a prominent place at your home for when your colleagues came to visit. It was absolutely the staple text. Sadly, its analysis of the segmented society, and particularly the challenges faced by those at the bottom deciles, is just as relevant today as it was then. In terms of the exam question, I'm not going to focus on the near term. Happy to take any questions if needed. I think the job of the insurance industry over the next year is pretty simple, is to carry on employing as many people as it can in the regionally disparate way that it does, with 2/3 of its jobs outside of London. It has to continue to try and provide insurance against supply chain failure, which is why we've negotiated the deal with the government on trade credit insurance. And it has to enable people, whether they're running care homes, whether they're looking to go on holidays, whether they're looking to take on new forms of employment, and businesses struggling to make sure that they can avoid any other problems for them. We have to make sure that we can provide that cover for them to play our part in national resilience. I just wanted to touch, therefore, very briefly on three macro themes that I think are critical to the next decade, and where I think the insurance and long-term savings industry can play a critical part. The first is the ageing society, because at the same time we're facing all these challenges, we have a society which is getting older and which will pose very profound challenges to the exchequer if we do not think more imaginatively and constructively about how we can share that burden, whether it's the cost of the retirement incomes of the expanding retired population, the cost of social care, and of course the cost of paying for people with lifelong disabilities. And there, I think the insurance and long-term savings world has a critical partnership role to play with government, building on the successes of auto enrolment, seeking to expand it where necessary with greater workplace protection, looking to reform the freedom and choice regime to make it harder for people to make daft decisions that squander their retirement income, and potentially to play a part with the state in providing solutions to social care. The second issue I wanted to touch on briefly and make sure we touched on is climate change. We'll refer to the fact that the insurance and long-term savings sector looks after £2 trillion worth of assets. How those assets are transitioned away from their current investment base to a greener, more sustainable portfolios in a way that enhances the sustainability of both the assets themselves and our world and our corporate investments, and at the same time maintains financial stability, because these are people's pensions that we're talking about and their retirement futures in the main, is one of the key challenges of our time. It's one of the key challenges facing regulators. It's one of the key challenges facing the insurance and long-term savings sector around the world. And as people who in the other part of the insurance sector insure those risks, the ever greater number of natural catastrophes, major weather events, huge flooding impacts in particular, it's in our interest, both as the custodian of the assets and as the risk protectors, to try and find some solutions. And if we don't, then we will have a major challenge on our hands that will last decades, not a couple of years. And then the third and final area I just wanted to touch on, which plays to Will's point about resilience, I suppose, is around risk management. How do we manage risk, particularly when we have an economy which is so heavily centered around SMEs, many of which, as we've seen in this crisis, are inherently fragile. And I think there's two areas at a high level where we can help. The first is that we have to work out some ways to help SMEs cope with those low frequency, high impact events like pandemics that don't come along very often, but when they do can be absolutely devastating. Because the traditional insurance model, where the misfortunes of the few are paid for by the premiums of the many, don't work. It doesn't work in a situation where you have a pandemic, or if you had a major cyber attack which took out half the internet capacity in the country, or if you had a solar flare which did something dramatic to our electricity supplies. In those sorts of circumstances, you need some form of public-private partnership that is already established that provides SMEs with some basic cover, or else you end up with some of the problems that we've seen with the SME sector at the moment, where they are not covered for pandemics as part of normal business insurance, neither here nor anywhere else in the world. So finding some solutions for those low frequency, high impact events is one part of the risk management challenge of the future. The second, I suppose, is how to make sure on a day-to-day basis, those things that can so easily finish off a business, whether it's a major fire, a major flood, an employee accident, or a major liability, that we don't just provide greater insurance cover for those things, which is critical to the economy, but we help build in resilience and better habits so that those businesses are better able to survive those sorts of impacts. And I'm sure there is a way in which we can bring those strands together, in which we can work more closely with firms to help them manage climate risk, and if they're flooded, then rebuild their premises in a way that makes them more resilient in the future, as well as using the workplace as a place where you can work with employees, educate them in a way about their financial awareness, build their understanding about how they can manage their own risks as individuals as well as companies, and have a much more active and dynamic partnership between the insurance and long-term savings sector and the people we insure, and ultimately the state. Because the final point is that huge things are possible from the insurance and long-term savings sector if it is in an effective partnership with the state. Then you have that multiplier effect where you can do so much more. There are huge opportunities for that. As somebody who's been involved in some of those things in the past, including Flood Re, I know full well those partnerships are never equal, but they are nonetheless worth persevering with and worth trying to develop if we are to meet the really big challenges that we face. And we have a key role to play in that, and we're eager to do it. So that's my remarks. Thank you.
That's really great. Thank you, Huw. So you've heard our three opening contributions, and now we are going to have some questions from you. I'm going to take a little batch to start off with, and I've got one very concrete short-term questions, then two much more sort of big picture long-term questions. So that will give us a bit of a mix. So the first person I want to ask to come in is Anne Daly, I think, or is Daly. So Anne, can you speak?
Yeah, can you hear?
Yes,
yeah, it's Anne Daly, well done. Lovely to see Anneliese again, who did a lot of work in Reading, where I'm from. How can we support the MAS estimated 8 million who will be at risk of poor mental health because of debt and in need of advice and support next year?
So thank you, Anne. So an awful lot of people already facing very severe debt and huge financial toll, but also a huge toll on mental health and family. And then we've got a question from William Parker. Hi, William. Are you coming through? Have we got William on the line? Otherwise, I'm going to read out his question. Okay, I'm sorry about that, William. William's question is, do you think it is time to consider universal basic income, which should help eliminate poor quality employment and raise living standards generally? The furlough scheme would have not been needed if it had existed. And then there's another blue skies question, which is this time from Mike Parker. I don't think they're related. Mike, are you on the call? Can you speak?
Yes, I am.
Hi, Mike. Do you want to ask your question?
Yes, I wouldn't ask people to predict exactly how many people are going to be unemployed, but I think all would agree it's going to be huge. So my question is it now time to seriously consider a 4-day week?
Great. So three two big blue sky and one very practical question. Huw, do you want to pick up any of those?
Just on the mental health provision question, I think that's one of the most important questions that are out there, not least for the research that Maz has pointed out. And I think there are two quite concrete things that can be done that are in my part of the world. The first is, I think, financial services companies, whether banks, insurers, asset managers and so on, have to continue the work that has already started to put in place very different processes for people dealing with people who declare that they have a mental health problem and that they have mental health concerns. This is an area where I think a lot of progress has been made in the last 5 years. There's still a huge way to go. And I know both from members of my own family as well as case studies that I've dealt with in this role, that you need a fundamentally different set of provisions in place for individuals who declare that they have a mental health problem, whether they're trying to buy insurance, whether they're trying to sort out an overdraft, or any of the other basic financial services transactions that we take for granted. And what is in many other ways a perfectly fine, economically efficient system for dealing with the vast majority of customers just does not work for those individuals. And I think most big insurance companies now have those processes in place, but we have to continue to refine them and develop them and invest in them in order to be able to deal with that, particularly if the problem is likely to grow, as would seem likely. The second brief area I'd just flag on that is, I think, the more that employers invest and are able to afford to invest in workplace protection insurance, that routinely covers for people who have mental health problems. The two most common causes of workplace illness now are musculoskeletal problems and mental health problems. And those are both covered absolutely without any caveats or quibbling in workplace protection insurance policies. And all the evidence shows that early intervention that is possible when an employer has taken that insurance enables those employees to get back to work much more quickly than if they are trying to sort of fight their way through a system without any help, and where their problems may be at an early stage and they may not therefore get the urgent help that they need. So those two things, they're pieces of a bigger jigsaw, but I think if we can focus on those in the insurance and long-term savings world, we can make a significant contribution to the problem that Anne flagged.
Thanks, Huw. Will, would you like to pick up one or two of those questions? Hi, Will. Are you still there?
Well, very quickly, yes. I mean, we all do Anneliese, so I'll be very quick. I do think that one of the consequences of the pandemic is going to be a reappraisal and maybe a reinvention of the workplace. Working from home is an obvious thing. That's one component. I'm persuadable on a 4-day week, but I think it kind of rather assumes as that we work on average, say whatever each person in the workforce works 1,700 hours of a year. Multiply that out by the number of workers, and you get the number of hours worked. You can divide that by 4 days or 5 days a week if you choose. I'm never convinced by that kind of arithmetic. I actually think that in some workplaces it works, in other places you have to have people kind of available to deal with customers' workflows as they come. So I'm kind of I'm really a kind of Keynesian full employment man. I mean, I think if you get demand levels high, you will get optimal levels of employment, and then you must leave sectors to devise how they will divvy up the hours kind of in any working week. On the universal basic income, I've moved a wee bit on this, and I've always up until now, one or two may have heard me say this before, but the commitment to universal basic income was in the 1878 Gotha program of the SPD when it first launched, and it was savagely criticized by a number of left-wing economists on the grounds that actually people that the working class were very keenly aware of the kind of rubric that a fair day's work for a fair day's pay. And I'm very concerned that shirkers and people would kind of game it and actually it might be, as one left-wing critic said, it might be appropriate for a higher level of communism in 200 years' time. But actually, he advised that the SPD abandoned that. And of course, that economist was Karl Marx. I just think the level of expense to have a tolerable universal basic income on which you can really build a life is so high, and the transfers from the working population so heavy that actually that I don't buy it as a proposition. I'm persuadable. I mean, people who I respect argue it. But I'm much more interested in kind of I thought the line that the Labour Party took at the last election of kind of universal kind of services, was a much kind of more credible position to take. But I'd be interested to hear what Anneliese has to say about it.
Anneliese, over to you.
Well, thank you very much for that invitation, Will. I mean, I think that, I think some of the, to me, some of the critiques suggested don't necessarily hold as much water and don't have that much empirical justification behind them. So I think personally the kind of suggestion that there would necessarily be a very strong disincentive effect in relation to work hasn't necessarily been proven when we've had kind of different versions of at least strong income replacement operating in different countries. But I do think there are other reasons why certainly I am yet to find a model of UBI which I think could be the answer to problems that many people suggest it would be. Why? Well, first of all, I suppose it's what Will pointed to, that actually in order for a UBI to provide some replacement of people's incomes, to enable them to lead a decent life if people are not able to earn, it needs to be set at actually quite a substantial level. I mean, we know, for example, what people receive through universal credit does not actually cover their costs, that it's actually a disincentive for people to seek work that's more closely fitted to their skill set, because it's set at such a low level. People are desperate not to fall out of work because they know how bad social security will be. So if we're going to have a UBI that will actually be enabling people to live without working and giving them that freedom, you've got to set it at quite a high level. So then the question is, well, how are you going to pay for it? Now, some people say just package up all social security and then divide it up. Well, in that case, it doesn't reflect the fact some people have got far more substantial needs and costs to face up to than others. Some other people would say, well, you just make a sovereign wealth fund, or you just start to tax digital companies, or, and so on and so forth. Well, some of these things have been attempted before. I would say in some circumstances they need more application. That needs to be done more substantively. But there's many other things, of course, that a social democratic government, a Labour government, might want to do with those funds in the first place. So I think in order to have a UBI that would really work, to me it's very logistically difficult to think through that. I think there's a different question, though, about the extent of conditionality that exists in the social security system, which sometimes gets kind of mixed up with debates around UBI. I mean, we're currently in a situation where, somebody who becomes unemployed at the age of 55 or 60 could be sanctioned right now that it's been switched back on, if they're not demonstrating that they're jumping through all the hoops of the universal credit system. I mean, that seems pretty silly to me. Again, the fact you've got to wait for so long to get income through the universal credit system rather than being given it as a grant initially, that kind of conditionality seems to me to be really problematic. Some people associate that with a UBI, but I think it's actually a slightly distinct question. Really quickly on the other ones, and Ali's question, very much agree. I think part of this actually is to do with that social security system and the fact it takes so long to get help through it, so pushing people into debt who wouldn't otherwise be falling into it. But I'd just also mention what this crisis is showing, I think, for many self-employed people, how mixed up a lot of people's personal finances are with their business finances as well. And, you know, to an extent, the loan schemes that have been put into place might help to pull that apart a little bit, because people needed to have a business account in order to be able to access them. But then there's a question about that business debt going forward, and we still don't have from government a solution to for small firms around you know, whether there will be a kind of longer term repayment period, etc., for small businesses. And I think that will be a concern for a lot of individuals as well. And then lastly, around working hours, I mean, I agree with quite a bit of what Will said around this. I mean, we need to be wary of suggesting there's a kind of lump of labour that we can just divide up and then kind of parcel it out to people. But I think some of the discussions around this, certainly from the trade union movement, are quite sophisticated ones. They're saying, well, look, let's look at in particular Kurzarbeit, you know, short hour working systems where people could be working for fewer hours, but they then have that salary support put in, you know, in a targeted manner in different particularly affected industries. I think that kind of subsidy could be very, very sensible as a way of preserving economic capacity. But we need to be wary, I think, of kind of maybe painting ourselves into a corner on this. Actually, for a lot of people right now, the big problem they have is they can't get enough hours. So they're obviously their hours have gone down, they're not getting enough income in. Sometimes when they hear people talking about this, they think, oh, you know, they want to cut my hours. Obviously, that's not what, you know, what many of us would want to do. We'd want to make sure people's incomes are retained, but we just have to be careful about language in these circumstances, I think.
Thanks so much, Anneliese. Before I go to the next question, I just want to bring in one of the other authors of the chapters, which is Andrew Pendleton from the New Economics Foundation, just to speak for about 1 minute on his contribution. He's written on the basically a new set of responsibilities for the private sector after these huge public sector bailouts. Andrew, do you want to come in and speak very briefly on your chapter?
Yes, I will very briefly, and thanks for the opportunity both to write the chapter and to speak very quickly now, and I'll be very brief. At some time, as panelists and questioners have already said, the job retention schemes are going to be removed. And the question is, how many people will be left unemployed? It's hard to know the answer to that, because not only are jobs likely to be unsupported because demand will probably be stubbornly failing to return, particularly to some sectors, but a lot of firms are going to use this as a moment when they shed jobs that they wanted to get rid of. And we look at the case in the chapter that I've written on the behalf of the New Economics Foundation of aviation. This links back to something Anneliese said in her presentation, because the really critical thing when government faces bailing out a whole sector like aviation is having a strong sense of purpose. And the purpose for a sector like aviation is twofold. And I think somebody in the questions has asked, why isn't there more green content in here? Well, there's actually a lot in the report. And one of the key parameters, one of the key senses of purpose the government needs to have is decarbonisation and decarbonising the aviation sector, but also accepting that demand has to be reduced in the future is really critical. So then the corollary of that, which is the second part of this sense of purpose, is looking at how you transition people from one place to another in a way which doesn't lead to them becoming unemployed and doesn't lead to a loss of income. So continuation of the job retention scheme, supporting them in their existing jobs, but putting alongside that a very strong retraining program. And the work that we've done on this in the aviation sector is now supported by the majority of the unions in the sector. It's really critical. In a sense, it's like the just transition, the just climate transition in practice, but without that strong sense of purpose and without the desire to make sure that we do things with that sense of purpose. So government taking an equity stake in many of the companies that it seeks to bail out, and particularly in sectors like aviation, it's going to be very hard to make that transition in a way which is both green and fair.
Andrew, thanks very much. And there's also a chapter on green transition by Adrian Buller from Commonwealth, which you should definitely look out for as well. Let me then bring in Jim King, who's got a question on local banking.
Hello.
Hi, Jim.
Hello there. Yes, I feel, I'm sure like many of your listeners and indeed probably speakers, that our banking system is broken. And the reason it's broken is that the country virtually is reliant on about 3, 4 or 5 large banks to provide the services for individuals like you and I, but also for businesses and especially for SMEs. And over the past number of years, and particularly since the 2008 crash, the funding for SMEs has declined significantly, and they're really the backbone of our economy. Therefore, is there a case to be made, and I believe that there is a case to be made, to set up localized, locally controlled mutual banks who will then be rooted in the local community, supported by perhaps the anchor institutions like housing associations, local councils, and so on, and will retain the wealth locally. Because I believe that the greatest extractors of wealth are the big banks and big financial institutions, because they extract that wealth from local communities, you and I, for example, and it ends up in the City of London, not in the wider London authorities, but in the City of London, and from there into the international financial markets.
Jim, thanks very much. We've got the question, and there's another question also asked about the mutual sector, so clearly a big area of interest. I want to now ask James Evans if he'd like to come in. Hi, James.
Is this working?
Yes, I can hear you fine.
Hi, yeah, just to carry on the local sort of issue, I wanted to ask what the panel thinks about the role of devolved governments in the recovery, because I know it's very difficult to hand over a chunk of money to some other body that you don't control. So I was wondering how that could realistically be done.
Thanks. And Dennis Wardleworth.
Hi. I'd like to ask, how do we get the electorate to think big, think Keynesian, when we still have the right politically, most of the media, the OBR even, and loads of others who still think of the model of the state as household as being the right one?
Anneliese, do you want to pick up some of those?
Poor old man.
Yeah,
so to Dennis's question first, I mean, I do wonder whether this may be changing to an extent, but there's a sting in the tail to my reason for thinking that. Why do I say that? Because actually we've even seen the current government saying, well, now is the time when we should be focusing on growing the economy. You know, that's a necessary thing to do, to focus on preserving economic capacity, to not balancing any books in the short term, to having that more long-term focus for as long as we have a favourable interest rates regime. The reason why I say I think there's maybe a bit of a sting in the tail around that is because, of course, we've then had, you know, after last night being informed that there would be a slightly more, or quite a bit more favourable settlement on public sector pay, this morning we then saw that the comprehensive spending review appears to have a much more traditionalist conservative focus on identifying efficiencies and potentially screwing down different forms of departmental funding. So perhaps there hasn't been so much change on the government side. But I think one other reason why maybe there are grounds to be optimistic here is because, of course, every nation is facing quite similar circumstances when it comes to their borrowing environment currently, with those relatively low interest rates, with the very substantial spending that's been necessary across different countries. And so therefore, I think maybe things are a bit more fluid and open for discussion than they might have been in the past. James's question about the devolved nations, I mean, I think it's a very, very important one. And actually, I mean, I would say that over this crisis, particularly when it comes to many of the major public health decisions, we've not seen the kind of joint working that we would have wanted to see. You know, we haven't seen particularly the UK government appearing to consult early with the devolved governments, nor indeed with local governments. I mean, I know they're a different form of decentralised government. We haven't seen that kind of coordination that's necessary. I do think actually when it comes to schemes like active labour market policy, it's very, very important to have that delivered reflecting local circumstances. Now, actually, I don't think that means it being driven from Holyrood a lot of the time. It will actually mean it being driven from the different regions and localities which have very different types of labour market in Scotland, you know, just as they do across England and indeed Wales as well. And in fact, the Welsh Government's focused active labour market programme for young unemployed people did exactly that. It was focused on the specificities of different areas. And then finally, Jim's question, really important one. In fact, I've been having a number of discussions with the Cooperative Party around this. I think that we do need to be looking to more mechanisms to enable small business in particular to access finance, individuals as well. So often we've heard rhetoric supporting, for example, credit unions, very, very little action. Actually quite difficult to scale them up sometimes, you know, and big requirements around governance, for example, and those kinds of challenges. But really now is a time when we need to be focused on boosting the cooperative sector. I would say also when it comes to ensuring that local economies are supported, we know that very often more mutual models, you know, social enterprises, etc., will often be the first forms of business to move into particularly economically challenged areas. That will be probably the case now again, but they need to receive the support that's necessary to do that and to enable them to be sustained into the future.
Anneliese, thanks. Huw, would you like to pick up any of those?
Yes, if I can hit the unmute button. Just perhaps in the interest of a lively debate, just a bit of a counter push on banking, which I don't represent. I represent insurance and long-term savings companies. But it's important not to, I think, to fall into a trope that everything about banks is big and therefore bad. You know, banks have to be big to a certain extent to be capitalised so that they can actually make good on their promises and not collapse. And that has been a problem with some subscale community-based institutions in the past, that one or two bad debts has been enough to knock them over. Banks, like insurers, employ the vast majority of people outside of the City of London, in the towns and regional cities of the United Kingdom, and they are key local employers there. And actually, they're likely to be some of the people who are able to keep going during this crisis and maintain that key part of local economy. And they are also, after the financial services crisis, quite rightly, very, very highly regulated in a way that looks after people's money properly, in a way that has not historically been the case, both for some big banks, but also sadly for some locally based institutions. So I hope we don't move into a sort of a view of the world which basically says anything that's local and community based has to be good, and has to be good at looking after other people's money, which is what you're doing if you're a banker or an insurer, long-term savings provider. We have to look at what models serve the communities the best, both in terms of the availability of finance, the availability of jobs, and a culture and a regulation that enables safe custodianship of those assets. Those have to be the sort of fundamentals that I don't think we should move away from, or else we really won't have learned the lessons from the financial crisis.
Thanks, Huw. Will?
Well, I mean, I think they're fantastic questions. I mean, I have to say that the cooperative sector in Britain has not been great at banking, actually. I mean, it doesn't mean it can't be in future. But I think there's an opportunity in that. I mean, I do think that we're going cashless. I think there's a whole open question about, you talk to senior bankers and they will, what will a bank be in 10 or 15 years time? And I think there's going to be we're going to go through a period of creative destruction, I think, in banking, and I think resurrecting the notion about their core purpose, which I think does reside in being rooted in place to a degree, notwithstanding the good points that Huw made about capitalisation. It's perfectly possible to be a well-capitalised bank, like say Handelsbanken, but also have a strong mutual. I mean, they're not incompatible. Having a deep. I mean, the problem with our banking system is its lack of its over centralisation, rather like the state. So, I mean, I think there's opportunity, and I think if I was in Anneliese's shoes, I mean, I think I'd keep the door quite what the British banking sector will be looking like in 2023, 2024, and get in the next election is an open question, actually. On this question of how to convince, I mean, I've been thinking about this for longer than I like to think. I mean, and trying to convince the Brits to think big, think Keynesian. You quickly get into British class structure. You get into the whole damn thing. Lord lieutenants. I was talking to someone who knows the DCMS well. There are 146 quangos that the DCMS administer, and at the minute, and you simply can't be on any of them unless you're a member of the Tory party. And you know, the way in which our state structures work, and the way that certain kinds of thinking gets kind of deified, reified, and you have to genuflect towards it to be, in inverted commas, responsible, is the heart of the problem. It's one of the things that I used to, amongst friends, one of my great challenges to Tony Blair when he went into the Iraq war was that actually I felt New Labour had an opportunity to really become the natural party of government. And I do think the Labour Party and the social democratic values that we champion are where the heartbeat of the British sit. And I think there was a real opportunity in the early 2000s to kind of cement that and to actually marginalize the kind of conservative thinking that it's so hard to crack once it's kind of in this majoritarian position. And I very much, and I thought going into the Iraq war was, throwing it all away, actually. And we threw away a position that we'd kind of worked to get into with consequences that everyone listening on this call knows. So we have to start again. And actually, Keir and Anneliese and the Shadow Cabinet, and actually all of us as outriders, have to win these arguments and battles all over again. I do think actually the class system in Britain is beginning to crack. So picking up on Anneliese's point of optimism, it's it's not quite as hegemonic as it used to be. High-tech entrepreneurs and big people in universities, some of the people in the ABI, and talk to some of the people, very sympathetic kind of members of in the city even. You'll find people who are really up for stakeholding and up for purposeful enterprise and supporting purposeful enterprise. Things are changing, but it's desperately slow. And actually, first of all, we have to win power, and then once we've got it, we have to keep it.
Will, thank you so much. Now, I know Anneliese needs to get off the call, but I've got one question just for her, the last question of the evening. That's from Sam Maynard, who says, can we have a Labour Party press release with a recovery plan that we work from when we are campaigning? So Anneliese, there's a good final question for you.
Well, thank you, Sam. And yeah, very sorry that I have to leave the call. I've got to sort out the kids. I mean, I would say that I think probably a recovery plan is something that would need more than a press release. It certainly should be something that's very well thought through. But certainly we've been trying to set out, and in fact, I think we've covered a number of elements of it in this call, the kinds of ambitions that we need to see as that recovery unfolds. We need to see the major investment programme to ensure that the jobs of the future are there. Especially, we need to make sure that they're in those technologies where we have a lot of innovation in the UK, but we're often really not developing it. And I think, again, here we should learn from other countries. We need to be dealing with those areas that left us so lacking in resilience when we started this crisis, whether we're talking about the labour market and its weaknesses, or the weaknesses of so many families' incomes. A quarter of UK families lacking £100 in savings when this crisis started. We need to be dealing with the many inequalities as well that again have been exposed throughout this crisis, regional, between different ethnic groups, between men and women as well. So certainly we are trying to set out a number of ways in which we can face up to those challenges. I'm not suggesting that Sam intimated that we could do that in 4 paragraphs. Somebody once told me that you should never have a press release that's longer than 4 paragraphs. It needs to be much, much more developed than that. And above all, it needs to make sure that we never again enter a crisis lacking resilience so much amongst our families, our communities, and indeed our country economically. So thanks so much for inviting me to be part of this discussion. Sorry again that I have to leave now. Thanks a lot.
Thank you very much, Anneliese, and to Will and Huw, and to all of you for participating tonight. As we've said throughout, it's a launch event for a packed report. So if you're already a Fabian member, you'll be getting that in the post in the next week or so. If you're not, of course, you should join the society, but it's there to download as well. Thanks so much for your time this evening, and enjoy the rest of your evening.
Thank you. Thank you very much. Thank you.
Thanks very much.